Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 16th of November 2016, and we're discussing the implications of a US dollar shortage and its effect on the rest of the world. For many months now, Jim Rickards and a host of gold and silver pumper channels have been raising the prospect of a dollar shortage and impending economic and financial collapse. We smiled at first when we saw this, as we recall many of these channels have advocated for many years prior that there were too many dollars in circulation, and this was going to lead to the collapse of the dollar and then the US economy. We have always advocated that the dollar, rather than weaken, was going to strengthen and would be the go-to currency during any global financial distress, and it appears that this may be borne out. However, the issue of a potential dollar shortage is a serious one and has consequences, which we shall cover here. This we are going to do spread over 2 videos, as we prefer to keep each of our videos within 10 minutes, and this is quite a complex subject. In video 1, we shall be covering what is actually meant as a dollar shortage and how it can be caused. And in video 2, which will be published tomorrow, we shall cover its implications for the world's economy. Okay, so what do we mean by a dollar shortage? Well, we shall quote Jim Rickards, who is a well-established author and generally acknowledged to be well-versed in this area. We will add that we also think him to be just a little too bullish on gold and silver and too bearish on his timings for economic collapse. However, he is learned and is always worth quoting. This is what he has had to say recently. Quote, "The idea of a dollar shortage sounds strange to many observers. Didn't the Fed print $3.4 trillion of new money from 2008 to 2015? How could there possibly be a dollar shortage with that much new money around?" His answer to that is that the world created new dollar-denominated debt faster than the Fed created money. Every dollar printed by the Federal Reserve has attached to it a 20-fold pyramid of debt. He goes on to say that this situation was fine, quote, as long as global growth was solid and dollars were flowing out of the US and into emerging markets, unquote. However, the current global recession could and is causing the servicing of such debt to become an impossible burden, especially as the dollar has gained such significant strength. A stronger dollar means dollar-denominated debt is more expensive, and debtors don't have the dollars to pay back those debts, hence a dollar shortage. This raises the prospect of a new liquidity crisis and financial panic worse than 2008. There are not enough dollars to go around. The situation could in fact be worsened if one considers that President-elect Trump's policies could potentially lead to higher interest rates and an even stronger dollar. The Fed, already promising to raise rates in December, could cause the dollar to rise even further and exacerbate this problem. Even the Bank for International Settlements have said, quote, "When so many borrowers have borrowed so much in dollars, dollar appreciation exposes borrowers and lenders to valuation changes and, in turn, impacts their balance sheets. If banks react to resurgent volatility by reducing their intermediation activity, as happened during the 2007 to 2009 crisis, the banking sector may become an amplifier of shocks rather than an absorber of shocks." Unquote. Which is banking terminology for global liquidity crisis. However, this is not the only potential cause of a dollar shortage, as has been published by Bloomberg just a couple of hours ago. They quote under the headline, "How Donald Trump Could Exacerbate a Global Dollar Shortage," the following. Quote, "While some analysts expect the dollar to strengthen under his presidency, that's not necessarily what's going to constrict funding, according to new research from Deutsche Bank AG, strategists George Saravelos and Robin Winkler. Instead, the election of Trump sets the stage for a further balkanization of global money markets and an impediment to the free flow of trillions of dollars worth of different currencies, including a curtailment of cross-border transactions and the possible end of currency swap lines offered by friendly central banks. For instance, Trump's plan to repatriate corporate profits to the US could take a chunk out of the world's available dollar funding, such as much as $2 trillion worth of corporate earnings currently sit outside the country. A US corporate tax holiday, or even a simplification of the tax code to encourage repatriation, would be most likely to impact the availability of dollar liquidity for European banks, where most US corporate earnings have been reinvested. While scarce dollar funding could be combated by central banks aiming to ease strains in the bowels of the financial system, Trump's populist rhetoric puts the availability of dollar swap lines from the Federal Reserve in doubt. Such dollar swap lines, in which central banks agree essentially to swap currencies with each other, saw the Fed provide some $600 billion worth of dollar liquidity during the 2008 financial crisis. In a world of rising protectionism and anti-globalization sentiment, it is doubtful that the commitment to such facilities can be taken for granted in the future. The provision of dollar liquidity caused material political backlash in the US during 2008, and tolerance from a Trump-led administration is likely to be even smaller." Unquote. So, in other words, a rising dollar, a repatriation of corporate profits to the US, and an unwillingness by the Fed to issue dollar swap lines can and possibly is already leading to a serious global dollar shortage. Tomorrow, in part 2, we shall discuss how this situation could pan out, the timings of such an event, and its implications for gold and silver prices, as well as other asset classes. Finally, we would like to thank one of our subscribers, Ray Vahi, who suggested we cover this topic. And whilst it was on the agenda amongst a long list of other subjects to be covered, we have brought it forward. Thank you, Ray, for your suggestion. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.